Okay.
Welcome, everybody, to our July 2024 Landowner Insights webinar. Thank you, everybody, for joining. We've got Steve Bruere and Kyle Walker joining us today, and we want to talk about some of the things we're seeing in land management specifically. It's an interesting time of the year. Kyle's working on getting all of his mid-year reports out, and that really helps calibrate a lot of what we're seeing out there in the marketplace and what's happening within the land management platform. So quick background for you, backdrop. So People's Company, land management is one of the key product areas, supporting also the brokerage and auction business, the agricultural appraisal business, and the licensing infrastructure that you see there across the country. I think everybody's pretty familiar with the company, but it's good to make sure that we're understanding exactly the scope, the national scale, the offices in all the major agricultural regions, and then the licensing infrastructure supporting it. And we'll tie back a fair bit in the conversation today with Kyle in particular on how sort of cross-platform interactions can be really supportive from a land management standpoint. Our capital markets group, working in all the major ag regions, supporting the deployment of capital. And then energy management and crop insurance are two businesses that are really important in helping the land managers actually deliver the full set of services that are needed today for offering our clients that comprehensive land management. Kyle, would you introduce yourself and a little bit about the land management platform in People's Company?
You bet. Thanks, Dave. My name is Kyle Walker. I'm the Director of Land Management here at People's Company. Been with People's Company for about 10 years now, originally from West Central Iowa. And, currently I, lead the farm management division, and we're actively managing and or consulting in about 24 different states across the country. The map you can see here shows the little PC icon will show where we're currently managing farms in relation to our licenses. And those range from the Pacific Northwest down to California, the Lake States, Midwest, all the way down to the Delta. And then we even have a guy out in Florida and Georgia at this point. Right now, I believe we are just shy of about 36 different crop types across the country. And it's really cool because you get into, your typical corn and soy and cotton and rice that a lot of people or a lot of farm managers are managing, but we also focus on a lot of specialty and organic crops. Just some that come to mind would be like sweet potatoes, pinto beans, purple corn, garbanzo beans, then almonds and sunflowers, even hemp and sorghum. So doing a lot of different crops across the country, and we're really, really proud of that. Our typical farm management ethos, I guess, or what we're trying to do as a company is we really want to focus on that long-term appreciation when it comes to managing farms, and not necessarily just strictly focus on the annual income like we see a lot of our competition. Oftentimes landowners want to focus on just that income, which is a little bit short-sighted. For instance, in Iowa, traditional appreciation is about 8% year over year over the last 30 years. And that annual income side is usually only about 2.5%. And so if we can focus on ways to improve that long-term appreciation through, improving irrigation potentially out west, or drainage improvements in the I states, or documenting, that's a big thing. I always say, you want to, if you're buying a used car, you want to have all the maintenance logs and everything that was done with the farm. And our farm management platform is built around making sure that the client knows exactly what's been done on the farm over the years, all the improvements. They know soil health, they know what their yields are. And so when they're going to buy a new farm or an asset, they can say, hey, that we know this farm has been taken care of well. It should appreciate better than the surrounding farms, and may get you a little bit extra money. And so that's a few things that we're doing as a company. We like to take on some specialty or difficult projects across the country as well. And so nothing's too big or small. And we're having a lot of fun with it.
So Kyle, one thing that's interesting, this is kind of mid-year reporting. So you've got all of your team managers that are spread across all these different regions that you're highlighting in the map here. Are there some interesting takeaways that you're sort of seeing as those reports are coming together for landowners that at a high level that are interesting to communicate?
Yeah, for sure. We like to document, especially in this report that's coming out now. We like to document, with pictures. So we have drone imagery of all of our farms. We of course are documenting precipitation and weather. We go out and we have all the sort of maps that you would have, and then we integrate some of our other division lines as far as the appraisal, energy management. So we're incorporating a lot of different things in our reports. And our typical reports would focus on soil health, fertility, yield each and every year, budgets and whatnot. But yeah, we're trying to document a number of different things in those reports. So, the idea is a landowner or a sophisticated client would have, a 20-minute read. They know everything there is to know about their farm. And then they can put it down and give us clear, direct action items on what to do, and we'll go make it happen.
You got any market hints for people? Are you seeing, what are you seeing on yields? What are you anticipating across different regions based on what you've seen so far?
Yeah, I mean, I think the general consensus is, I focus most of my time in central and southern Iowa. I think yields are going to be very good. Especially if we can get a couple more rains here in early August, I guess, especially to fill out this corn. And I think the beans are looking incredible right now as well. And I think we're going to have very good yields. As you get into some of the outlier regions, I think in general we've had good rain this year. I know Illinois was a little wet early in the year, and then now they're coming along very well, and their crops looking good as well. The southern portion of the country, I think, is doing well. The Delta has been, very wet, and then it got very hot. I know they had some struggles getting their crop in, but all in all, I think there's going to be good yield out there. As far as prices, we're seeing a pretty compressed market right now. Corn is under $4, as far as cash corn for December. November beans, I believe, are under $10 right now. So it's a little bit different market environment than we've been in the last, 3 to 4 years. I think this is the lowest prices we've seen since 2020. And so, dramatically changes some of the things that we do in the farm management industry.
Yeah, absolutely. And I want to pull Steve in here a little bit. And this is a key theme that we wanted to hit on because, the land management business has definitely evolved a lot over the last couple decades, right? And if we look at what we're asking our managers to do and what the platform has to deliver to landowner clients right now, that scope is expanding quite a bit, right? And we're talking about renewables, right? And all of the land grabs that are going on around some of that development, ecosystem service valuations, and seeing some business models emerge there. We definitely have seen massive plus ups in some conservation programs, particularly with the Inflation Reduction Act. We're also seeing both sort of pressures and opportunities around sustainability and some regenerative types of certifications, and kind of setting this up a little bit as a bit of an outline for the conversation today. The risk management elements and making sure that the management team really understands crop insurance and how that could impact opportunities within direct operations, things like custom farming, the digitization of the industry, right? And we've talked about that a lot. And then we want to talk a little bit about emerging concerns and issues that are popping up there, and then a little bit more, Kyle, on some of your strategies. But Steve, one thing that I wanted to get your thoughts on, you've been building this out here for over 20 years. What have you seen in terms of the evolution of land management and some of this expanding scope of what we really need to have managers capable of supporting with?
Yeah, Dave, you've touched on a lot of the key drivers, but as you said, when I got into the real estate and farm management business 22 years ago, it was largely, just collect rent checks, right, and make sure the ditches are mowed, and that was in a lot of ways farm management. And today there's just so many different technical variables that come into it, and as we've oriented how we built the business out, you see that in the service lines, the energy management group. Our farm managers are getting letters constantly from wind developers and solar developers with offers to put renewable leases on their farms. And if you're not trained up to deal with those types of issues, then how do you respond and really address the business terms and whatnot? And so that's where our energy management group has came in and really collaborated with our farm management team. You'd mentioned crop insurance. 93% of the acres in the U.S. have a crop insurance policy with a guarantee associated with them. And so we use crop insurance routinely to underwrite how we think about farm assets. And, I don't know if we'll get into this today, but we've found some interesting opportunities to add, say, sweet corn on a farm and increase your insurable revenue by a couple $100 an acre over what you were previously operating on that farm. And so really being able to understand the different insurance add-ons and how to optimize crop insurance and those sorts of issues, this becomes a really challenging business. It's no longer just maximizing cash rent as you think about how to manage these farms. I know we're going to talk a little bit today about leading harvest. That's a farmland sustainability standard that we were part of standing up, and a lot of the major asset managers that own farmland assets around the country have enrolled their acres in leading harvest. You're starting to see some market premiums now come into this. So if your farm meets these sustainability standards, you're starting to see some premiums come through. So we've been real active with that. And you've talked about, drainage tile improvements and irrigation improvements and whatnot. And there's a lot of cost share that can go into those programs and getting cost share for cover crops. And so if you're not in the weeds every day working on these types of transactions, it's hard to know where to go and what to do. So we've put a lot of energy into building out our farm management platform. And Kyle mentioned the ethos, and it's really asset management at this point. And it's really thinking about how do you create superior appreciation on these assets. And Kyle did a nice job framing that up. Your 30-year appreciation rate in Iowa is 8% on farmland, and your cash yields around 2.5, 3. And Dave, I think you've got those charts here that show that. And so when you think about managing farmland for your total return, oftentimes if you're managing farmland where your focus is on maximizing cash rent, you're oftentimes doing that at the detriment to the long-term sustainability of the asset. And so we've put a lot of emphasis into documenting what happens on the farm, what the fertility practices are, what the yield history is, and creating that history on the farm so that we can create that superior appreciation for our clients.
Yeah, I think it's useful to reiterate and just sort of frame up for the folks listening these fundamental characteristics that we see as the drivers, consistent drivers on farmland performance, right? Recognizing that it's a capital gains driven asset class. And this is largely true all the way across the country, right? You see some relationships between that average annual appreciation, this map above here by state, and the cap rates, that annual cash yield by state as well. It consistently focusing on the appreciation is largely a key driver of income and return over time. And then one that's pretty important, Kyle, and we'll get into some of this detail on how we work with tenants and farm partners, but recognizing that the asset is a long-term asset. It's a 10+ year hold. And, do you want to talk a little bit about how we think about tenants and farmers that are working on our assets a little bit as partners?
Yeah. So that's a great point, Dave. We like to identify talented farmers, operators. We like to think that we collaborate with these guys. We want transparency. We want to work with guys that get and understand that hey, we're going to need a few things. We're going to need to know that you are fertilizing each and every year, and we'd like to know what yields are, and we want to track all these things. But at the end of the day, we're starting to work with some really, really sophisticated farm operators that understand that it's like, hey, we're not in this adversarial type role that oftentimes our business or our has kind of been pigeonholed in, where the farm manager operator dynamic has never been a good one over the years. We're trying to change that a little bit. We want to work with collaborative, transparent operators that are doing things the right way and understand that, if we do the XYZ, then they have the ability to get more farms and rent more acres from us. And then also, then we get all the benefits of that and the positive aspects to where we're getting, good things done on the farms, and our landowners too are really happy because they get planting maps, they get sprayer maps, they get, yield maps, they get all the things that we've asked for and we've told them we can provide. But you don't get that if you working with grumpy farmers that don't want to provide that information.
Yeah, and we'll definitely dive into this a little bit more of the strategies around that as we continue the conversation. The other points around farmland being that sort of premier real asset inflation hedge. There's some interesting dynamics from an inflationary perspective from on the cost of production side that we'll talk about as we highlight some challenges, and also we'll kind of get into a little bit of what's income looking like going forward too. So. Also, a real quick sort of framing here when we think about farmland and those long-term drivers of return. We've highlighted pretty significantly that it's a capital gains driven asset class. And where does that appreciation come from? It's the yield trends, right? We continue to produce more with less. And this growth is really consistent across almost all crops. And this creates more and more revenue. Kyle, you've highlighted several times the documentation that we're looking for around yield. It's pretty interesting. This is an example here in Grundy County, Iowa, and we're looking at roughly a 2.3 bushel per acre per year growth in corn yields. I'm kind of curious, Kyle, if your Midwest farms and comparing that corn yield growth, have you dove into that across managed farms where you have long-term data, and is that the kind of performance that you're seeing?
Yeah, and it's actually really cool, Dave. Now that we can, you're streamlining some of these, yield trends on FarmWorth and our internal software, but we can throw our managed farms into the software as well. And we have 8-10 years of yield data, and you could throw this in and you can say, hey, this farm is producing at 4 bushel per average increase on a given year versus 2. If you simply underwrite that at 2.5%, it's a $400 per acre increase on a given year versus just strictly trend line. And so if we can really document this and throw the actual managed farm yield on these trend lines and say, hey, we're doing more than the trend line yields are, then all of a sudden you're driving that appreciation side that we keep hitting on.
Yeah, another key sort of long-term value driver in creating that real stability in annual income is this federal crop insurance. And Steve hit on this previously. Around 93% of the acres in the country have some sort of annual revenue guarantee from the federal crop insurance program. Kyle, do you want to talk a little bit about what you're doing with the managers in terms of trying to make sure they understand what's available from a federal crop insurance standpoint, from policies, revenue protection, and data, and then B, certainly as you're talking to landowners that may be interested in implementing custom farming or more of a direct operation approach, how you might use that crop insurance program.
Yeah, so the first step is just, making sure our managers understand the federal crop insurance guidelines and, various different revenue guarantees that are provided. And certain crops you may have different revenue guarantees. For instance, corn, you may have $900 in revenue on a given year, and your cost of production may be $600. So, essentially you're guaranteed a $300 profit in a given year on your corn acres. And then having that conversation with the landowner saying, hey, this is where we feel like, we think the minimum loss would be or profit. And so it's pretty easy to pitch, hey, we think we can, based off crop insurance, we think we're going to have a $300 profit. And that would be the minimum, the most risk to you. Potentially we would be able to get a lot more revenue off that crop if we have good yields or prices. And so, the floor is not set very low, I guess. And so we're working with a lot of clients that are doing custom farming, and that would mean they would have the active interest in the crop. We would go out and we would hire someone to plant, harvest. We'd make all the agronomic decisions, and then we'd end up selling the grain at the end of the year, and that would be owned 100% by the landowner. And so, in the next couple of years, it may get a little bit compressed if commodity prices stay low, but typically once a landowner starts custom farming, they don't turn back. They like to continue custom farming, and they like having that active interest in the crop.
You bet. That's helpful. A couple other sort of long-term drivers that we're paying attention to. Obviously the global food, feed, fiber, fuel dynamic is great for U.S. farmland, right? We're seeing expansion in the renewables fuel market, and the quality of diets are expanding. These are key themes that we've certainly got our eye on moving forward, along with some emerging revenue streams. And we mentioned this earlier, right? When we think about this low carbon energy transition, a really, really large amount of money from the Inflation Reduction Act getting matched with private funds that are moving towards deployment on wind, solar, battery storage, other sorts of low carbon energy transition outcomes. It's creating some unique opportunities for landowners, and it's certainly they're needing some help, right? And we have our energy management team, and Kyle, you're working really closely with our energy management team to help folks understand this. Has there been a lot of sort of unsolicited development offers on managed farms? And what kinds of things are you seeing? What kinds of things are we having to make sure that we're trying to be helpful in getting them the best outcomes they can get with this sort of emerging revenue?
Yeah, when you're managing as many acres as we are across the country, you're in a perpetual loop of getting letters in the mail, getting people contacting you to do XYZ. So it's been really helpful having the energy management division to throw ideas off of, send them information as we get it, and then identify potential areas that may be something worth chasing. Steve's team is selling a lot of farmland around the Des Moines metro, for instance, and we have clients that we're managing farms for, but yet we're also working with the energy division and the brokerage division to say, hey, there may be some additional opportunities on your farmland, or there may be some opportunities in 10 years from now. And then, so potentially in 10 years, they may buy farmland at $10,000 an acre at traditional, farmland prices. But, there may be that development aspect or that energy aspect down the road that could make that farm worth double or triple, or who knows, So, but it's about identifying those opportunities and then knowing what to do with them once they come in the door.
Steve, I'm kind of curious to pull you in here in terms of orchestrating the broader strategy of the business and seeing this interaction and that real potential to help landowners maximize outcomes, having the platform from a land management standpoint, and then also building this expertise around supporting landowners. Your thoughts and a little bit about what you're seeing as this whole new emergent revenue stream is popping out.
Yeah, I would just say that there's a lot of interesting opportunities out there, and some are great opportunities that clients should pursue, and sometimes there are opportunities that maybe we look at together and decide that they shouldn't pursue them. And we're seeing a lot of offers for solar right now in Illinois on super high quality ground, 140 PI type of ground, some of the best of the best, and some of those offers look pretty appealing on the front end, but it's a change in land use, and it's a income stream that at the end of the life of the income stream, what's the underlying land look like after it's been covered in solar panels, and what are the decommissioning requirements, and then you look at some of those long-term drivers we talked about of appreciation at 8%. Well, maybe a $1,200 solar lease sounds great today, but if your land with corn or soybeans on it appreciates at 8%, there's a period in time where those income streams can cross over, and what feels like a good deal today may not be a good deal, 10 years from now. And so that's really what we're trying to do, is just help people think through it. And sometimes we see those opportunities, and they're great opportunities we should pursue. And sometimes you see them and it's no thanks, that's not a good fit for this particular client. And having the ability to help folks analyze that's really been a big part of what we're up to.
Yeah, and that absolutely puts additional pressure on the land managers to start to be more and more versed and have a broader knowledge base and be able to pull in the other members of the team, particularly from our energy management group, to be able to parse what do these look like? How are they actually fitting in terms of offers across the broader marketplace, and having that sort of broad geographic base so you can start to see how these different outcomes are functioning and different offers are functioning is really pretty important. The carbon storage side of this is interesting. It's been a slower developing market, but it kind of fits within this broader notion of actual value from the ecosystem services that farmland is performing for society. And one of the places this is emerging is in some of the conservation programs, right? There's a little bit of tension in terms of how public funds are going to continue to drive a lot of this versus perhaps some additional efficiencies in some private markets. Kyle, I know you're kind of getting deep with some partner organizations around actually getting pretty quantitative with conservation planning and scoring criteria on all the managed farms. You want to talk through that just a little bit?
Yeah, so the idea is we want to work with these groups that understand EQIP, CSP, the programs that are offered by the NRCS, USDA. Not saying our managers don't, and we certainly do, but we want to work with the guys that are writing the reports and doing this on a daily basis and really identifying how this money can impact the landowner and potentially what areas of the farm we could look at to enroll in some sort of a program. And so we have engaged a couple groups, and we worked with them here over the last 2 or 3 years, and we're trying to stand up a collaboration in FarmWorth to where we're going to be working with a group from Illinois on potentially doing some of these things. But the idea is to identify landowner acres that could potentially work in the EQIP program or CSP, and then have the program written by a third party, and then that will be funded through the USDA, and then we'll get additional funding for our clients and secure additional revenue on the farm.
Yeah, so when we start to actually look at having a hard quantitative scoring criteria across different what USDA is going to call resource concerns, that actually adds another significant element to the documentation. Continuous improvement, we'll talk about leading harvest and those certifications. This gets pretty explicit in terms of that core philosophy of long-term asset value as well. And one thing I want to call out, this was pulled from some USDA data here within the last about week and a half. And at that point, through a good chunk of July, the EQIP and CSP programs that Kyle mentioned have actually allocated just short of $1.7 billion. This is a massive plus up, and the IRA set the stage for these programs to continue to get larger going forward. And we're already seeing a lot of support in the next Farm Bill conversations. So this adds to another element of, making sure that the management platform and the managers working with each landowner have the capacity and ability to take advantage of funding streams that can create value on assets going forward. And that theme kind of hits into this digitization story.
Real quick on that. And I believe a lot of the documentation and the planning, making sure that you're what am I trying to say? You're getting your information in submitted. You have to have that done for next year's EQIP CSP program here in September of 24. So we have to start. We're working on that now for a lot of our clients, and we want to make sure that we have everything submitted by September of this year. So,
yeah, that's a great point, Kyle. Go ahead.
One thing I was just going to add in there, Kyle just got a drainage water management plan approved on a piece of farmland that I own, and so these programs are kind of painful to navigate, and if it weren't for Kyle and his team, I probably wouldn't have actually got through the paperwork to get that drainage management plan put together on this farm, and that's going to lead to increased asset value, better drainage, and better sustainability for the asset long term.
Yeah, both of those points from you guys are a good lead into this digitization theme, right? These are challenging outcomes. They're programs that require a lot of documentation, a lot of very specific sort of process elements, and a lot of background information that has to be accurate in order to work through. This fits again into this broader theme of managers have to have a pretty broad knowledge base in order to deliver this full set of services to our clients now. And Kyle, you've mentioned it a few times, our FarmWorth platform, our internal toolkit that we're building to help facilitate this interaction between the different divisions within the company and different expertise, having all of these data resources available, and with third parties that can help us start to work through programs like this. Maybe a little bit of conversation here, Kyle, specifically to how having a digital platform can enable the managers to take on this broad range of responsibilities, along with the traditional responsibilities on farm that come with the farm management service.
Yeah, I mean, it's just endless, the thing that FarmWorth is able to do. I mean, from simply the mapping systems, it takes us 5-10 seconds to pull a nice map binder where it used to take 45 minutes. On FarmWorth, where, you guys have started identifying solar, wind opportunities across the country. We can overlay our farm managed farms and see if there's an active wind or solar project in certain areas, or transmission lines. Those would be the red lines on the map there. And, you can see our yellow farm management farms there. There's some transmission lines running through there. That's potential upside for our clients. I whined and cried, I guess, for a little while about I wanted weather built into FarmWorth. And within a couple of weeks, our software guys had gone out and they'd figured out how to get complete weather data on FarmWorth, which would have, temperature, precipitation, soil moisture, growing degree units, as compared to the averages in a given year. And that really drives a lot of that custom farming stuff that we hit on earlier, where we can say, hey, we've got ample precipitation, or hey, we're in a drought, or we have, inadequate subsoil moisture, and this is going to be a problem. But you can start anticipating a number of different things based off the information that's been incorporated into FarmWorth. So it's been very positive as far as my team. Every day I feel like there's more and more things that are added. And I really like the fact that, hey, if we come up with an idea and we say this would be, worth adding, or can we implement this idea, or can we talk to this group that is going to help us with EQIP, CSP, because ultimately it helps with the leading harvest principles, and it helps us, document continuous improvement on the farms. FarmWorth allows us to do that in that platform. So I've been incredibly happy with FarmWorth.
Yeah, so let's start to get into some of the issues and concerns that we're wanting to communicate with our landowner clients right now. Kyle, this kind of comes back around to where we started, where you're in process of getting these mid-year reports, and there's certainly some dynamic pressures that are out there in the environment right now. Commodity prices are facing some real challenges. At the same time that we've got a pretty high cost of working capital, interest rates are high. And generally speaking, there's the inflation. While a great outcome from farmland at a macro level as an asset class, the inflation in costs of production, when we think about equipment, when we think about labor, potentially some of the other inputs, that can be a really major challenge. When we see this coming together, Kyle, maybe a little bit of commentary on feedback that you're getting from tenants, from in some of your direct operations, custom farming. What are you thinking about rents going forward, terminations? Philosophically, where are you guys at right now?
Yeah, so I think to set the stage, 2023, incredibly profitable year. Farmers made good money. Rent prices were not low, I should say, but they, I don't know if they were as high as they got in 24. Coming into this year, we've seen some of the highest cash rent prices that we've seen potentially ever. And so all of a sudden now we're in this, compressed environment of commodity prices, like I said, under $4 corn, under $10 beans. Guys are getting a little bit worried. You couple in the cost of capital, 8-9%. A lot of these operating lines of credit to put the crop in, get the crop out. You're starting to see some real stress in the market now. Having record revenue years last year is helping. Now I think 26 is going to be a real driver to where if we do have compressed commodity prices for another year, I think that's when things get really serious. But we are starting to get a few phone calls from guys that are kicking the tires, seeing what it's going to be like if potential rent would come down, or if the landowner would be willing to bring rent down, and that's something that needs to be adjusted both ways, right? When corn hits $6, of course, the landowner is going to want high cash rent. When corn hits $3-4, then of course we need to kind of reevaluate what rent numbers should do. With that being said, I just think that's we're going to get a lot of calls this fall. I'm not planning to terminate a lot of my farm leases this year, of course, because we have good rent numbers already established. So I would recommend, if a farmer does not like the lease or an operator doesn't like the lease, then they need to review the terms of the lease and then serve termination on the landowner. And that's not very typical in all my years of working in this industry. You don't see a farmer terminate a landowner very often, but I think you're going to see it some this year. And just a couple dates, Iowa lease termination dates is on or before September 1. I believe South Dakota is the same way. And then you could go around like Illinois, I believe it's 4 months before the end of the lease date. Kansas is 30 days before March 1. So if anybody is interested in seeing those termination dates, there's a couple blogs that are on the People's Company website. So just go to peoplescompany.com and then hit the blogs and then type in termination, and it'll take you to those blogs, and it should outline when you would need to terminate a tenant and or the other way around.
Hey, Steve, how are you thinking about this on some of your assets that you have personally in the conversation around rents and some of these pressures going into 2025?
Yeah, I think part of it is, and it comes back to how you approach the whole overall management business. And so a lot of the leases, like on the farms that we manage as a company, could you have gotten higher cash rents the last couple of years than we're getting on some farms? Probably. But you're really trying to leave some meat on the bone for the tenant. And that comes back to these long-term relationships that you're trying to build with these farm operators, where you're trying to put them in a position to be successful. And if you take care of them, they'll take care of your farm. And so I think part of the what you'll hear about on some of these lease terminations, you've seen some of these cash rent auctions that have led to some really crazy rents that really weren't appropriate or sustainable. And so, yeah, those are going to get terminated. But I think a lot of the leases we have, Kyle, are set up in such a way that, hopefully that farm operator had an opportunity to price some grain a couple of years out when commodity prices were higher. And they've had a couple of years of really strong profits. And we all know how hard it is to come across additional acres. And so I think a lot of these farms, while maybe, 2025, as we sit here at this very moment, looks a little more bleak with the current commodity prices. I think a lot of guys understand, hey, this is a long-term relationship on these farms. And, we've had some good years, and, something will happen here over the next 12 months that will give us another opportunity for some good commodity pricing and whatnot. So I'm not anticipating a lot of major adjustments there, but this comes back to also some of the crop insurance ideas that we have and some of the alternative crops that we have. If we can find ways to create additional upside for these farms in these lower commodity price environments, that's kind of where we're putting our focus. And so I think there will be some pressure and maybe some adjustments, but overall I think the market's going to stay pretty steady on rents this year.
You bet. One other thing that we've run into a fair bit is it's kind of getting harder to get property insurance on these assets. This is particularly true on assets that have infrastructure, irrigation. We're actually seeing a lot of insurers pull out of certain regions, and This is kind of a note to landowners that are listening here to the webinar that we've got to keep an eye on this. Premiums are likely to continue to go up at a little bit of a high rate. Do you guys have any sort of interesting anecdotes or feedback around some of the challenges we've seen on the property insurance side?
Yes.
Well, yeah, you mentioned irrigation, but you're seeing it on grain bins and buildings, really any improvements at all. And it's been a result of a lot of these storms that have moved through the Midwest over the last few years. And the insurers are having some major claims. And so they're raising premiums or completely pulling out of the market. And so that's something that, we're putting a lot of energy into, is evaluating crop insurance deductibles on farms that we manage and making sure that we don't get our profits on the farm eroded by crop insurance premiums, and make sure we have adequate insurance, but make sure that we're also not overpaying on premium.
Yeah, and to add on to that, anything with improvements, like Steve had mentioned, irrigation, infrastructure, pivots, grain bins, houses, hunting lot, whatever you want to group into that. Over the last couple of years, we've seen premiums skyrocket, 20, 30, even doubled in some instances. And I don't think that's going to stop just in the environment we're in. And so it's just a matter of making sure that you have adequate coverage, and then going out and having 2 or 3 bids done on each and every farm, making sure that you're getting the best value for your dollar. But I've even had some very intelligent clients that have said, hey, we have a house that got a little bit of hail damage the other day, but I don't even know if I want you to have insurance go out and look at it, because I don't want to jeopardize losing my insurance on that asset, just because in this environment, you're seeing a lot of insurance companies drop farmland assets, especially if they have a lot of improvements like grain bins, houses, and that irrigation stuff. So it's a weird environment. I've never seen it in my career, and hopefully it turns around here, but I don't know if it will in anytime soon.
Yeah, it's another area where we've got to make sure that all of our managers and the folks interacting with clients are understanding the issue and understanding the dynamics that we need to face, that we're facing, in order to help the landowners make good choices. Kyle, one other quick question when we get into the issues we're dealing with, right? So there's certainly entering a period where you can see some flattening on income, whereas income had been increasing. And it comes back to that commodity price environment, the costs of working capital, et cetera. Philosophically, we've well established this focus on long-term asset value. How are you thinking about capital improvements in that environment with your clients? And are you seeing any potential sort of pullback on projects that may have been planned over the next year?
Yeah, I have not seen it personally with, and I still continue to manage a few farms. I have not seen it personally, any of my clients saying, hey, we're gonna not proceed with this project that we've been planning to do, just because, I don't anticipate, getting as much revenue off the farm this year. I have heard some across the company that have said, hey, yeah, our clients are not going to do this project until they think that they're in a better position. And so, yeah, we are seeing it. I just have not seen it personally.
Yeah, and philosophically, we're going to, if the project's the right one for long-term asset value, we'll certainly want to work with that landowner in finding the potentially programs that could be helpful, or work on the strategies to kind of keep that moving forward to drive that asset value.
Yeah, typically, you have to secure the funding in advance of those programs. So by the time you get to implementing them, the hard work's already done. Like Steve alluded to with his project on his personal farm, I believe I've been working on that for over a year now. And finally, we're starting to see the light of day, and hopefully we can get started on it this fall. But yeah, typically the projects and the funding are secured months in advance, or even years in advance, before the actual implementation and the dirt work starts moving. So
now I want to close this out by just kind of hitting on kind of the execution of the platform strategies and thinking through this, right? So We've talked a fair bit about tenants as partners in creating asset value. And there's a lot of ways that you're kind of approaching that with your management team. And, one thing that's sort of interesting, Kyle, is your Farmer of the Year program. Do you want to talk about that a little bit?
Yeah, so last year we set up a Farmer of the Year award. It's funny. I was grilling a big steak on my deck, and I had this idea. It's like, gosh, we have a lot to be thankful for, especially in the Midwest. I'm a little bit overweight myself. I probably eat too much, but I owe it all to farmers, right? And so I actually called Steve up that night and I said, hey, what's your thought on a Farmer of the Year award, and if standing something up, and he loved it. And so basically, we just want to honor a farmer that's doing things the right way, a guy that we work with across the country, guy or gal, family, community, production, conservation, transparency, all the keywords we've hit on throughout this webinar. And so last year was our inaugural year. We honored a guy by the name of Jackson Drost from Mahaska County. And this year we're going to be implementing the second annual Farmer of the Year award. And we do that at the Land Investment Expo every January. And so pretty proud of it. We want it to be a real honor for these guys that are doing things the right way. And we choose that person or select the person from a farmer that we work with on a managed farm across the country.
Yeah, and Steve, you mentioned Leading Harvest a little bit earlier when we were talking through. Kyle, can you give a little bit more background on exactly what we're doing with Leading Harvest and why we think it's so important?
Yeah, so all People's Company managed acres are enrolled in Leading Harvest. It's a sustainability standard. I believe it was started by a coalition of environmental groups that collaborate that have on sustainable agricultural principles and growth. 13 different principles that assures that our clients' food, fuel, and fiber are grown in a sustainable manner. It's third-party audited, so that means that an auditing body will come out to our farms. They typically select 2 different regions on a given year. I believe this last year was Louisiana, or the Delta region is specifically Louisiana in the Midwest. The year before was the Pacific Northwest and a different state in the Midwest. But third-party audited, they come out. We are the only company in the country that have got audited by 2 different auditing bodies. And so we're pretty proud of that. And it just assures our clients that, we are managing in a sustainable manner for long-term growth. And we want to make sure that we're doing the little things for continuous improvement on each farms. And so, if you look at the bottom of a cup, the timber industry has they have a similar sustainable, what am I trying to say, standard that is a little stamp on the bottom of the cup that essentially shows everyone that the timber industry has a sustainable model in place. And that's what we're trying to do with Leading Harvest. It's leading to some supply chain upside. The other day we got a call. We talked with a group and they're willing to pay 15 cents more per bushel for corn that's raised in a certain state with Leading Harvest, with that Leading Harvest seal or standard. And so we're pretty happy with that. We think it's going to continue to evolve and build, and then hopefully it offers our clients upside when farmland operators will say, hey, I can get an extra $1, I can get extra 50 cents a bushel, and then that should trickle down to our landowner clients to where they can potentially get better rent, or they can get more revenue on their farm based off of that standard.
Yeah, it's starting to show some real market value, and we see a path over time where it becomes almost sort of an entry point, right? Like a barrier to entry if you don't have that kind of standard to get priority access to the marketplace. And so this has been a really big step and a pretty heavy lift, and it fits right into the process you're going through with all of your management team and their partners on the ground, Kyle, right now around getting the data, getting the information through the growing season, and then of course going into the fall and moving that into your annual business planning process, farm by farm. And this really fits into this sort of broad strategic characterization that we've had here in the conversation today around a pretty broad base of things that we're expecting from our land managers in order to make sure in today's world and environment we can provide the platform outcomes that landowners need in order to maximize that asset value. I guess, Steve or Kyle, any parting thoughts for the group before we kind of close out this month's Insights webinar?
Yeah, Dave, I would just add a couple of thoughts. Several years ago, my family farmed south of Des Moines, corn and soybean operation. My brother farms with my dad, and I actually, feel like I'm completely capable of managing my own farms, but have a lot going on as we're running the business across the country and working on a lot of different projects. And so the personal farms that I own around the Des Moines metro that I rent to my brother, I actually hired Kyle's team to manage those farms for me, and it's been just a real relief. A lot of the little things that I wouldn't do myself, insurance certificate and documenting yield history and documenting fertility and applying for cover crop payments and cost share and those sorts of things. Their team's doing a great job handling that for me. And I always joke around, Thanksgiving conversation, negotiating rent with your brother is not that exciting. And so putting a third party in there that can manage it more as a business relationship's a big thing. And so when I got into this business 22 years ago, like I said, the farm management world's changed substantially, and I think it's gone largely from being, as Kyle alluded to, maybe a little adversarial, focused on maximizing cash rent. And when you look at the big picture of what we think farm management is, it's more of an asset management based approach. It's about creating those partnerships with your farm tenants where you have alignment with them, where there's some meat on the bone for them to make some money. But you're really driving that long-term appreciation and sustainability of the asset. And those are the types of clients that we like to work with and farmers that we like to work with. And we've really orchestrated the business around creating those win-win relationships. So hopefully that shined through a little bit here today for everybody. The market's evolving, and yet it's a really exciting time to be in agriculture, and there's a lot of levers to pull, and there's a lot of upside, and there's a lot of ways to add value. And so we're trying to make sure folks understand that there's a lot of options out there too, and beyond just being focused on rent only.
Well, thank you, Steve and Kyle, for joining and talking a little bit about management and what we're seeing in that business. As always, my email is here for anybody that has any follow-up questions or wants to talk about anything more that we kind of covered today. And with that, I think we'll close out and look forward to joining you again on a future Insights webinar. Thanks, everybody, for joining.